Hello, everyone. My name is John Schelling, and welcome to our presentation, Optimizing Your Bottom Line and Shareholder Income. I'll be introducing my co-presenter, Roy Flemming, shortly, but we want to keep to our 10-minute time schedule here, so we're going to move to our disclaimer slide right now. This will let you pause and read over. This will outline the limitations and basically the text of our presentation, and as I mentioned, the limitations as well. So I want to take this moment now to introduce my co-presenter, Roy Flemming. Roy is a senior advisor with Cultivate Advisors, and Roy has 20 years of experience either running his own businesses or managing businesses at a senior level. With that introduction complete, Roy, I'll hand it over to you.
Thanks, John. Appreciate it. Excited to be here just to have this conversation and share our thoughts with everyone on cash flow. I work with small and medium-sized businesses every day. And in my client base, one of the first things we always end up talking about when they walk through my office door is, what is their cash flow? And the importance is quite simply that the cash flow is what drives the engine of the entire business. And so you'd be surprised at how many times I'll have that conversation. And most people can't say in the present moment what their existing cash flow is. And so I look at it from 3 points of view. One of them is assigning a threshold, pulling levers, and then having cash scenarios in place. I'll talk through that. But it all comes from one place, and it comes from the place of what type of owner are you right now? And what kind of owner do you want to be? And the owners that are feeling stress, don't have cash clarity because they don't have rules in place, are the ones that are losing sleep at night. And those are the ones that walk through my office door that I enjoy helping the most. And what we do for them, and what I try to do with them, is to slow things down and really go, let's look at the business through a lens of cash clarity. Let's pull back 30,000 feet and put some logic in place and some rules in place so we can make business decisions, not personal decisions. And so it's about finding opportunities sometimes and being creative, but it's really about taking away that fear and the unknown. And once you do that, you can make way better business decisions that help driving that cash flow. And so I mentioned earlier something about cash flow being the financial engine. And when I think about it, it looks like this. It's the model that drives the whole entire piece of the business. If you want to be able to drive sales, you need the marketing piece, you need cash to do that. Once you've got sales spun up, now you need staff, you need to recruit, you may need more leadership, and then you may need to have more productivity in the business to make sure that everything is working well. And all that comes from one place, and that's the cash flow engine of the business. And so the first thing I say is, let's figure out your numbers. You got to know your numbers. Let's slow it down. And the first thing we do is we assign, as I mentioned earlier, a cash threshold. What does that mean? It means we try to figure out what your risk tolerance is, what not only your personal risk tolerance is, but what's the risk tolerance of the business. We'll do a stress test, we'll put some in-case scenarios in place, and we'll go, hey, what happens if sales drop by 10, 20, 30%? What does that mean to the business? What if there's a crisis of some kind, like we experienced back in March with COVID, and we're still experiencing? How long could the business withstand that? And sometimes just having that clarity and understanding of what the business could take allows people to slow it down and then be able to have a clear sense of how the business could move forward. The second thing we do and look at is the levers within the business to actually get the business moving forward when it comes to cash. So some of those levers might be things like pricing. We may need to move pricing up or down. Figuring out how the cash actually flows through the business. Is there something there that we need to adjust? Is there a product we need to remove? Is there one that's got lower margin or more margin? What's the conversion? Like, how are you converting through the sales process? Where's your account receivable versus the accounts payable process? How much money do you have outstanding? How much money do you have to pay out? What are your terms of payment? Can we slow those down? Can we speed some up? And so really figuring out what those are can help you understand what you can do, what control you have to make sure cash is going through to the bottom line and increasing cash or preserving it where need be. And then the third one is really building cash scenarios. And that's, again, playing offense versus defense, and being prepared is really what I'd say. It's an ounce of prevention equals a pound of cure thought. And so let's slow it down again. Let's look at the things in the business that could go wrong, but moreover, what can we do at this particular time with the scenarios we have in place? what are the bumpers, so to speak, or the bookends of the business, right? Most importantly, I'd say, is looking at cash from a monthly perspective versus a year-end perspective, and changing that so people understand what their burn rate, figure out what those scenarios are, and we'll paint a few pictures and then make some better decisions. So sometimes I've even had clients decide that they want to expand because there's an economic downturn, things are cheaper, we can afford to take some cash and then drive more to the bottom line from a net profit standpoint. So that's what we do. That's what I do with my clients. And then once we're done, we hand them over to you, John, so then you could take their existing cash flow and turn it into even more down the road and make sure that they're protected. And so with that, I'm going to pass it off to John. John has got over 30 years and has designed and implemented financial programs for clients for that length of time. His process is similar to ours, and it makes so much sense. The first thing he does is he slows it down and he asks questions. He listens, and then he works interactively with his clients to help build programs and processes that now give them the best of what could possibly be from that cash flow that we just produced. So John, I'll just pass it off to you and let you take it from here.
Well, thanks, Roy, for that introduction and great presentation on how your services and strategies can help our listeners enhance and improve their bottom line.
Thank
I'm
you.
going to build on Roy's presentation. I talked to you about our PET program. Now, our PET program is under our Smart Business Strategies, and it's not a program that's designed for your cat or your dog. PET is an acronym we use to explain our programs that protect, enhance, and tax shelter your corporate financial assets, cash flows, and your shareholder income. So your business is a success, and as a successful business and taking Roy's advice and services, you have surplus cash flow that is not required for business operations. That surplus cash flow starts to accumulate in the form of financial assets within your corporation. This success has some challenges though, and one of the challenges is the taxation on the financial assets and cash flow of your company, which can be quite onerous. Our PET programs are designed to significantly reduce that tax burden on those assets and cash flows. Now let's look at shareholder income. You also want to make withdrawals from your corporation to maintain your lifestyle and other personal needs. And there are a couple avenues there. Typically, people use T4 income and or dividends. Our PET programs develop a third avenue to make withdrawals that allow withdrawals at significantly lower tax rates than the T4 or dividend income. So you really get a 2-4. You get reduced taxation in your corporation on the assets and cash flow, and reduced taxation on the money you withdraw in the form of shareholder income. Now, PET programs are designed to complement, not replace, your existing financial structure. You don't have to change your portfolios or advisors. We work within it. So to draw an analogy, think of the security system in your home. It blends in with the existing structure of your home. It protects and shelters you from potential calamities. And it also provides an enhancement to the value of your home and an enhancement of your enjoyment because of the protection and peace of mind they provide. To any good strategy, including our PET programs and the resources we use to implement them, are designed, to adapt to changing economic, business, and personal situations. The only certainty in future endeavors and future goals and plans is uncertainty. And whatever you plan now is going to change going into the future. Our PET programs, once implemented, can change and adapt to situations, whether they're controllable or uncontrollable, that change your original goals or plans. Now, our programs involve a 6-step process that we adhere to quite strictly, and for 2 simple reasons. One, they're efficient in that we realize that as business owners, your time is valuable, so we want to get from concept to implementation as time efficiently and as possible. They're also effective. As Roy mentioned in the introduction, our process is an interactive one. So the PET program is not a one-size-fits-all. It's really designed specifically to your particular situation based on your feedback and the feedback, where necessary, of your advisors. So if you're interested in the PEP program, I strongly recommend you contact us and we'll get you into step one, which is simply a 15 to 20 minute, what we call get to know you meeting, where there's no specific agenda. All we do is chat, basically, get to know each other a little bit better, get a feel for each other. We can explain our programs and processes a little more. And from that, we can determine whether it's worthwhile going on to step two of our program. So that's my presentation. Thank you for listening. And Roy, I'm going to pass it back to you to finish us off.
Thanks, John. That was great. Really glad that we have spent this few minutes with you, and look forward to doing more as we kind of unpack the business of finance. If you need or feel like either one of us can support your business, you can reach us at the contact information sitting here. My process is very similar to John's. It's just a quick hello, and we'll spend some time learning about your business on behalf of TLS Financial and John and myself. Thank you for joining us. Have a great afternoon.